Everybody, Rob Booker here, author of Adventures of a Currency Trader and best-selling author of the brand new book Trading by Faith. Welcome to our conversation today. I want to talk to you about the difference between principles and tactics when it comes to trading. This is a really important conversation, and most of us never have this conversation. There's a huge difference between principles and tactics when it comes to trading. Let's talk about tactics first. Tactics is what most of us think about. This is what I usually think about. It's what I fall into. It's a pattern that repeats itself over and over and over again with me. A tactic is really like a trading strategy. For example, trade when X crosses Y. This is a trading rule. And this is what most of us fall back on. Tactics are like indicators, robots. I'm a fan of robots, but that's a tactic. It's a strategy. And we get caught up in this. And I get caught up in this conversation too all the time. I get caught up in the conversation of if I just follow this formula for entries and exits, that everything's going to be okay. And we find comfort in that. We relax when we hand over the responsibility for our success to a set of rules. And I don't want to criticize this too much because I've spent a lot of my career as a trader in the last 17 years using tactics, building indicators, designing, and running robots so I can sit around and talk about trading with great people like you. I love tactics. I use tactics all the time. However, I get stuck. There are problems associated with tactics. There's a big warning. Tactics sometimes, they break. Tactics break down. We go through a losing streak or we have a drawdown and we get frustrated with our tactics and we say, oh, I want to switch to a new tactic. I want to switch to a new system, a new strategy, a new formula because something has gone wrong. Now, there's another way to think about trading, and I've been trying, even after 17 years, I've been trying to retrain my brain to think about trading with principles instead of tactics. And this is a really important conversation for me because in all of 2018, I want to focus on this. A principle of trading, instead of a tactic, will say something along the lines of never let a loss get out of control. This is a principle. It doesn't say, oh, and a loss getting out of control is like 1% or 2%. It's not a rule. It's a principle, and it depends on you and I thinking for ourselves and being, I want to say smart enough, but I want to be careful about it, being smart enough to know our limits. And so sometimes a loss might be a 2% loss, and that might not be out of control. We might feel like we're doing it for a reason, and we're staying in the trade for a reason. And another time, a loss of 0.5% might be out of control. Here's another principle. Keep banking easy wins. That's a principle. It's definitely not a trading strategy. And you might say, oh, okay, forget it. This is dumb. But just give me a second here, because imagine if you had a lot of different indicators that you like to use, a lot of different systems or formulas that you like to use. If you say just keep banking easy wins, this is a principle that works for me. I might wake up in the morning and trade with divergence. I might wake up in the morning and say, this correlation is out of whack. I might wake up in the morning and say, this super high value company has dropped in price and I have an opportunity to buy that company at a discount. Those are all principles. Those are all tactics, of course, buying companies when they fall in price or using divergence or using moving averages or using the volume weighted moving average or whatever it is. Those are all tactics. But a principle says keep banking easy wins. So I might wake up in the morning and say, yeah, I'm going to use divergence today, but I'm going to remember the principle, keep banking easy wins. The reason this would be a principle for me is that I get into a lot of trouble when I start trying to let a win become a giant win. And then I start getting greedy. So I have to remember to keep banking easy wins. Another principle for you might be something along the lines of use longer time frame charts. It's not quite a tactic. It's not a specific rule. It's not a rule that says use the daily chart and the Fibonacci moon sequence or whatever. That's the tactic. It would be a principle that says make sure that I always refer to longer time frame charts when planning my trades. That's a principle. So I want you to think, here's the challenge for today. Think about principles that matter to you. Think about the last time you went through a really great winning streak in your trading. And think about what principles you are following. You might have as a principle, use one system at a time. That's great. And it could be any different system. Remember, the systems break, formulas break, trading rules break down. But principles are timeless. If you liked the video, hit the like or subscribe button. I'm so happy to spend some time with you. My name is Rob Booker, and I will see you tomorrow.